Traders, in this video we're going to talk about how price action moves and how to understand the language of price action to find high probability setups. Now first, before we're going to talk about the bias and the actual movement of prices, I want to quickly talk about what a high probability setup is. Basically, a high probability setup is a two-legged pullback on the right context. When we're talking about uptrend, high probability setup is a two-legged pullback second entry long because market likes to move in pairs of twos, or a failed second entry short at the key entry point. Those are high probability setups in uptrend. In addition, high low. Now, why the second entry short failure is a high probability setup? Because the second entry short forms against the main trend, which is bullish. For downtrend, we look for high probability setup second entry short at key entry points, and we look for high probability setup second entry long failure, because any second entry long that goes against the main trend, which is down, is going to be considered a trap. And of course, we're looking for lower high confirmation patterns. Now, right from the get-go, my goal is to analyze the structure, and I can see that this is the overnight session, this right here basically. And since the very beginning of today's session, entire overnight structure is a strong bearish downtrend. EMA, this 21 bar exponential moving average supportive indicator, is showing me that it keeps rejecting prices every single time. And this is important because once I see this decently strong downtrend right from the get-go during overnight session, once I see this little bullish uptrend working higher, I immediately expect that this uptrend is just a correction and it will end soon, because the likelihood of us getting a reversal from this point on all the way up to here is fairly small. So since I only expect that this is going to be a reversal, and by the way, I'm drawing my trend lines because I want to follow the trend line rule, which says after break of a channel, traders expect for prices to create new extreme, and we have first leg down to new low, pull back, second leg down to new low. And after new low is formed, according to trendline rules, we expect correction or possibly reversal. Now, I expect this uptrend to be a correction, so that means that I expect correction phase. So I'm going to draw a trading range. At first, I had my trading range like this, but once prices kept overshooting a little bit, I just dragged it slightly higher. Prices are working higher, and we have a new high form, which is where I'm going to reset the count. We have new high, first entry long, pullback, second entry long. Now, can I take a second entry long? I cannot, because it is far from EMA, and a second entry long needs to form close to exponential moving average. And if anything, I'm looking to go short, but I need to see clean decisive push below the EMA to confirm the bearish momentum, because overall bias is bearish. Okay, so at this point on, there is no high probability setup. Market created another push up, another push down. No clean setup just yet. However, prices are working above EMA. So once I see prices working above EMA and they are not pushing lower instantly as I first expected, that means that this uptrend is most likely going to get new extreme, okay? Because the trendline rule says that after a break, you're going to expect for prices to create new high. And notice prices eventually did create new extreme. So from price action perspective, this uptrend played out with the break and first leg, pullback, second leg to a new extreme. Now I cannot sell just yet because you never know how many pushes to the upside there are going to be. You can get just a little fake out, tick higher and reversal down. If I expect for prices to reverse down, which I do expect because the major bias was bearish and this is just a correction phase, really most likely not going to get a strong reversal to the upside, I need to see push below exponential moving average. So we have a strong push below EMA and we have a lower high right at the exponential moving average. Now, normally this would be a decent setup. In this structure particularly, I feel it is a little bit aggressive just yet because you have quite a little small trading range here and you will be going short at the lows of this trading range. And also you've been above EMA for quite some time here. So I would really want to see reversal pattern. Reversal pattern would be a failed second entry long, okay? Because any second entry long, which it formed here, by the way, we have a new high, first entry long, pullback, second entry long, is going to be considered a trap because the trend is down. Right now, uptrend played out, so we expect for prices to resume the main bias, okay? So this second entry long is a failure, and this is a first high probability setup for today. Now the signal bar, as you can see on my chart, is unfortunately a little bit bullish, 1 or 2 ticks bullish body. That prevented me from taking this trade myself. I was hoping we would get 1 tick higher here, reverse it down, and we would get also first entry short, second entry short, but it never happened. But this is a new high, first entry long, second entry long failure, and this is a reversal pattern. Uptrend played out, strong push below EMA. Even this lower high is not bad. If you took this lower high, definitely you're following the rules and you're following the context. Just feel it is a little bit early at this particular example, but both setups are fairly decent. Now prices are pushing lower, and this is where I withdrew downtrend like this, because we expect for prices to go all the way up from this resistance all the way down here, okay? But I can see that we have a break. We don't have a pullback to exponential moving average. We would want to see a two-legged pullback at the EMA. Now this downtrend has a break and a new extreme, pullback, another new extreme, and pullback, another new extreme. So this tells me once I see break and a new extreme and we're not reversing or correcting, that means there probably is a wider pattern. So this is where I located this spike and a channel pattern, and you guys can see how nicely it is fitting. So my goal is always to find a proper channel, because prices are always following some form of a pattern, and this is right now confirming the overall bearish bias we established right during the overnight session. So we are pushing lower and we are pulling back to exponential moving average. Notice the high probability setup would be this setup right here. So I cannot just sell blindly a first entries, a bunch of entries at these lows. I want to see prices to pull back to key entry point, and we have pull back to exponential moving average. But notice we have a new low, we have only a first entry short. I was expecting to get a second entry short here. Unfortunately, it never formed, it corrected. It looked like it's going to form second entry short, but there is no trigger below this bearish bar, which would give us a first entry short pullback, second entry short. So there is no second entry short, and at this point on, it would be too wide. I would not be interested in taking this trade anyway, because the bullish correction was too strong and was too wide. However, can I go long at this point on? I cannot, because this downtrend still needs to get new extreme. All right, so I just wait for this bullish correction to play out. We have break, two legs to new extreme, first leg up, pull back, second leg up. We created additional little push. Now at this point on, bias is still bearish. Notice we clearly are trending lower, but I cannot just sell just yet above exponential moving average. I preferably want to see for prices to push below and offer me a confirmation of the bearish momentum, and I want to see a lower high below EMA, and that never form. Prices continue pushing lower, and by the time you get lower high, notice you would go short all the way down here, all the way down to these lows. This was the trading range that I drew at the time, something like this. So I would be going short directly into it, and I just cannot risk it. Even though it worked, it's just too close into these lows. And you also hit new high, first entry long, pullback, second entry long, failure. Another high probability setup, fell second entry long, but it is right into these lows, so there is really no high probability setup to take into these lows. This was tempting. I wanted to see a second entry short, but really you cannot really break the rules and go short into these lows. Now, as prices are trending lower, and you're going to look at the hard right side of the chart like this, you can see that there's possibly a wider downtrend, because this is clearly a bearish momentum. So once I see this, I can either look for channel like this. Okay, this is a wider channel, but this channel is not correct. Okay, and why this channel is not correct? Because notice how much empty room there is at the bottom. Once you see so much empty room at the bottom half of the trading range, this is telling you this trend is wrong. It's probably going to roll over. And when I see this, okay, when I'm looking for wider channel and the first steeper channel has so much empty room, this tells me that most likely there's a flatter alternative. So I drew this channel right here, okay, just to keep me on the right side to get the bias. So right here, this is a nicely larger spike and a channel pattern, which solidifies that there is a bearish bias in this market. All right, so once I'm watching this, I'm paying attention to these shortened channels. Now we have new low form. Even for this downtrend, notice this spike and a channel created new low form. And we have a push higher, a high low, confirmation of this little failed breakout. Marco from Topic Trading considered this a really great setup. High low, short trap after all downtrends have new extreme. It is a little bit more advanced, but I'm going to mark it as a slightly aggressive setup because you really need to know what you're doing here. But the fact that you're at the bottom of trading range, this downtrend has a new low, this downtrend has a new low as well. Lower high, failed, nice bullish bar. It is a little bit more advanced, but chances are you're really going to trap traders. When I was watching this, I was expecting to get a failed second entry short. Okay, and you may ask, why am I trying to go long when there's such a strong bearish bias? Well, the channel is quite flat, and you guys can see we're going sideways for a long time. So you expect there to be a larger correction, at least to this trend line, or at least to this resistance. So I was looking to get a nice short trap on a failed second entry short, but by the time I get a failed second entry short, it's already way too high up, too far from EMA. You cannot really take failed second entry short this far up. So at this point on, you're just waiting patiently and you're playing this trading range because the structure has changed right now. The structure has transformed into a trading range. You can see that you have a lot of up and down through the EMA. You have flat exponential moving average indicating that this is a trading range. So I'm going to be sticking to short-term channels. We have a break, new high form. I even redrew uptrend like this. You have a small break, new high, and notice what you have. You have first leg up, pull back, second leg up, and on a larger frame you have a first leg up here, pull back, second leg up here. So there are two leg up pullbacks inside of two leg up pullbacks. And notice what we have. We have new low, first entry short, pullback, second entry short. After both uptrends played out, regardless how you draw it, and you're at the top of this trading range. So this is a second entry short, high probability setup, great bearish signal bar. Uptrend played out, indicating to you that it is okay to go short. Resistance is a key entry point, confirming the bearish structure, and overall bias right now is still bearish because you just came from the bottom and this is only where you're going to go long. But once the bullish correction already played out, indicating there is no strong bullish reversal, that's when you can resume the bearish downtrend and be looking for shorts. Now, as prices are pushing below EMA, what is the next alternative after second entry short would be to get lower high, but there is no good lower high. You never really take higher and reverse down. It's just bunch of bars just stacked. Unfortunately, you have to watch this go without you. I'm going to redraw another uptrend because I'm just following the rules. And notice, we have new low, first entry short, pullback, second entry short. Why I didn't mark the second entry short? Notice the difference between this bullish lag and this bullish lag. This is a clean, strong, bullish one spike to the upside. And here you have bearish bars in between, indicating more of a pullback, more of a slow, gradual move to the upside. After this big bullish bounce here and the trend range is holding, I don't think you want to go short too quickly. Even though overall bias is bearish, remember, you can still pull back to this trend line. It's very close. We've been in trend range for a long time. So after such a big bullish lag, I would wait for a lower high. And once again, no lower high at the EMA. By the time you get any setup, it's already way too down to these lows. So you have to be patient at this point. Nothing you can do but watch this go without you. Even though this bearish bar is tempting. Notice what you get. You have a downtrend working lower, which is right now clearly breaking this trend range. Now, you don't want to be fading to the upside, okay? You don't want to be fading this trend range. Most breakouts of trend ranges will fail, but you don't want to be buying because overall bias is bearish, okay? So instead, I want to see a second entry short to like a pullback at the key entry point. But do I get it? I get a new low, first entry short, pullback, second entry short. Would look like great high probability setup if it wasn't for the gap to exponential moving average. I was almost about to take it, but unfortunately, there is a gap to EMA, so it's a little bit too far. Today, you had to be really aggressive to find a decent setups, but market kept continuing, pushing lower, creating new extreme. Now, when I was watching this live, I created even a little bit wider channel, which is not correct because it doesn't have third swing confirmation, and we have new low form, first entry short, pullback, second entry short. We have a two-legged pullback at the EMA, big bearish bar. Now, I took this trade myself, even though I knew I was not supposed to take it because my gut feeling was telling me we are overdue for a correction. Excuse me, I marked wrong trade. We are overdue for a correction because we moved too far down. This was a steep move down during a flat channel, and there's going to be a profit taking and we're going to take a correction. This is what I have in mind because we need to understand how trend moves, and we have push phase, correction phase, push phase, correction phase, push phase, and correction phase. All right. And every time you get overextended with the push phase, you need to be careful because there is going to be a pullback and market needs to pull back. But since this was such a nice two-legged pullback with the break new high, clean two legs and big bearish bar, I just had to take it. Unfortunately, I got burned and I was a little bit tilted afterwards because not that this is a losing trade because losing trades are part of the business, because I knew that I was supposed to wait here, but I decided to take it anyway. But still decent trade to take a losing trade on, in my opinion, to like a pullback. Now, I don't think you want to take any other short after that because this structure, the reason still remains. We are about to correct, and if anything, this downtrend really didn't get confirmation. So this is a shortened trend with the break and a new extreme. So this is a little bit more advanced to identify that it's going to correct, but with more experience, you can get the confirmation. Now, the prices are working to the upside, which means I'm going to draw a larger correction. Now, we actually have new low, push above EMA and a high low off the EMA, off this resistance, strong bullish signal bar, I will go into market for more advanced traders. However, sticking with the bias is the main goal because the main bias is still bearish. There is a break and a new high for this uptrend. Okay, what does that mean? That means that the overall bias may resume if we push below exponential moving average. We are correcting. I'm not interested in taking a long entry because main bias is very bearish and this uptrend has a break and new high. So I'm going to redraw short-term downtrend to help me to prevent from me to taking longs. We have new high, first entry long, pullback, second entry long, failure. So this is a failed second entry long, high probability setup because this downtrend needs to get new low. You push below EMA, which confirmed the overall bearish momentum, confirmed the main pattern, and it is a nice bearish signal bar, break, and a new low form. And when I was actually watching this, I wonder, yeah, because my trend line is a little bit off here. We managed to get a confirmation here. Yeah, you can see how perfectly the trend line matches this bounce. I just had it a little bit off at the highs, but you guys can see how the market geometry works, is a real thing. You can clearly see the bearish bias for the most part. Now, I'm going to zoom in. Now, today was not my best day because since I was tilted from losing trade, I revenge traded and I took this second entry short because it was the second entry short of the EMA. I'm not going to market because it's not a great setup. I just took a trade here and unfortunately I had another losing trade here, which I haven't revenge traded in a very long time, but it happens. You know, you can never really get truly free away from this, but it's been many months since I revenge traded like this, but it happened. So I took a bad losing trade right here. I actually had a decent signal limit order at the half of the body, so it wasn't so bad, but still I was not supposed to take this trade. It was a mental error and market reverse continuing higher. We are bouncing off the trend line, but this is just a first entry long. First signal bar is bullish doji, then the second signal bar is a bearish body, but half of it is bearish stim. So you cannot really short here, even though it is confirming perfectly the key entry point. However, notice I'm going to reanalyze the structure. What is the structure looking like? The structure is looking like a trading range with the bearish structure, of course, because we have a move down, move up, move down, move up, move down. We're starting to have flat EMA and it's starting to look like a trading range on a bigger frame. So what I did, we need to find a larger trading range, something like this, because I'm going to use these highs right here to help me find a larger trading range. Basically, you can just extend this. You can extend this resistance all the way here and you don't really need it. If you don't have this trading range, your main focus is still following the trend line rule for this major downtrend, okay? Why? Because it's the first break for this downtrend, so you expect new extreme to be formed, okay? There's a possibility for you to draw a wider uptrend like this, which is not correct because this is a too much of a wider uptrend for this bearish downtrend. You want to stick to the short-term uptrends. And same thing, by the way, right here at the top, there's a case for buyers to find a wider uptrend like this in this trading range. And notice, this is a very common failed second entry long in trading range structure when buyers are drawing their uptrends too wide. Okay, I've talked about this in my last live trading video. Failed second entry long because buyers are looking at the wide uptrend, which is not correct because the main pattern is down. So we want to stick to the short-term uptrends. For that reason, I'm just going to be drawing the short-term patterns and waiting for prices to resume bearish structure. Okay, I cannot just pick these tops. You can see what can happen. It keeps pushing higher. My goal is to wait for prices to push below EMA and confirm that the main spike in a channel is coming into play. Okay, the bias is still bearish. So once we are pushing lower, we have a new high, first entry long, pullback, second entry long, failure. Big bearish bar below EMA. Bar is too big for us to enter. If you would enter under this bar, basically the scalp was almost made. So you had to wait here. From price action perspective, this is a great entry. So I will mark it. Had the signal bar been a little bit smaller because the context is really great. You expect new low for the main downtrend. However, notice first entry long, second entry long. So we reset the count. First entry long, second entry long, failure, and a new low, first entry short, second entry short. So this is another setup. Another failed second entry long, second entry short, and I actually took this trade on a retracement and I managed to get a nice runner above these highs right here. I trailed it, so this was a great high probability setup, big bearish bar off the EMA, off of this trend line. Notice how the prices are respecting the EMA and respecting the trend line, which now has fourth confirmation telling you that this is correct trend line. You're coming off the resistance, which you expect for prices to reach all the way down here, and you need new low for the major downtrend. Okay, following the price action rules, notice the bearish bias is still coming into play. At this point on, however, we have overshoot, which leads to break of a trend line or possibly straight up reversal. We're most likely not going to get reversal because the bearish bias was the main bias for today. However, I cannot sell just yet. If we get new low, first entry short, second entry short here, can I take it off the trend line? I cannot. Overshoot can break the trend line. As I'm watching break a new high for this uptrend, I want to see the same thing right here. I want to see push below EMA confirmation for bearish momentum and to take failed second entry long. We have new high, first entry long, pull back, and unfortunately you don't get a failed second entry long here. You just push all the way down and missed the entire setup. You still need to get new extreme for the main downtrend. You get a second entry short here, but look at the signal bar, bullish. Then the second bar is way too big bearish, so unfortunately you get a second entry short here, but you really cannot take it. And then you get another new low where you reset the count because this low is lower than this. So this is the lowest low. You have first entry short, pull back, second entry short. This is a high probability setup because downtrend needs to get new extreme. And notice you have a break and new high for the uptrend, indicating that the uptrend played out. This is why we draw the short-term corrections, because once you have a break and new high, this is telling us that the uptrend played out and it's okay to sell. Uptrend break and new high, it is okay to sell. This is the first leg, pull back, second leg to the upside, and a great second entry short. Market created new extreme for the spike and a channel. Bearish bias was fulfilled, and we can expect correction or reversal. Most likely not reversal because this has been very strong downtrend. So just a correction. Your job as a price action trader is to look for high probability setups, is to find proper key entry points where the high probability setups would form, and it is to follow the bias. And always remember, bigger bias in price action is taking precedence. Don't try to reverse the market too quickly. It's okay to take a couple of good short traps just for a quick scalp, but don't look for too quick of a reversal. You will never go wrong with still looking for a new extreme of the downtrend. It is always better to miss few long setups because if there's going to be strong uptrend, you will get plenty of chances on the way up. It is always better to miss few longs, aggressive ones, because bigger pattern will most likely take precedence and new low is going to be created.